Good day, traders. Stacey Burke from Stacey Burke Trading, and just going over the 1 hour British pound chart today, and just taking our simple forex trading videos into the 1 hour time frames. We're using the same simple concepts, but I'm going to give you some ideas hopefully today that will allow you to step back from the shorter time frames, or even combine the two, and just looking at again some simple support and resistance, pattern breaks, time of day with the opening range specifically, and sticking to the highest probability types of setups, meaning using the bank hours with your support and resistance levels. But we're going to just expand a bit further and talk about breakout pullback. Now, main thing we're going to sort of go over today is the opening ranges and how that relates from the Asia to London session and from the London to the New York session. Now I'm just looking at the 23rd of August here, 19th, on the Friday right here, and then the Monday here. We'll go through this, but the opening range, as you may recall, is the first couple hours of the session. In this particular case, I like to use that first 2 hours of the day where the market makers have come in and sort of established our range just as Asia's opening. So if we were trading London, or even if you're trading Asia, you've got a range here. Obviously, you could be looking to the left from the high from the US session, and predominantly what we're looking to see is where's our level where there's been support generated, where's our level of resistance been generated. So right off the bat, we see the market break out in Asia, doesn't quite get to the lows from the previous near the US close, but this yellow, these first two bars of yellow, is Frankfurt and the London Open. Now what's key about this is just simple strategies of breakout and then pullback. Now the question I often get from people is how do you know which one's the breakout and how do you know which one's the pullback? Well, in this particular case, we're merely looking for where the market is giving us an area where we could position ourselves if we were to take a trade in letting the market pick us up and limiting our downside. So for example, that first hour of London, the market has indicated that this level, this breakout, has been tested but not yet filled. Now that market could continue obviously to move north, but at the same time we know that if there's bulls that have entered the market, we know that they have stops beneath this bear bar. So for example, if they traded the breakout long, or if they went long on a shorter time frame at the close of that hour, their stops most likely are beneath one of those two bars. So if that market is going to move, it's going to move fast to test the other side. And the reason why that is that it's going to be seeking liquidity. So a breakout order could be triggered at the low of that bull bar. Your stop would be above the bull bar. Now, some traders may look to take profits at a 1-to-1, or in this particular case, at 2 times the range of risk. Now, their return would be 1. But the other side of that is they may get out knowing that the gap that bar has now created at some point will be filled. So there's 2 ways to trade this. Position trade with your stop above the bull bar, stay in the trade for the pullback and then the resume of trend, or scalp your profit at the break of that low from the next hour and wait for a pullback again where the gap has been filled, and re-enter that either on a retest or swing bear bar at the US Open, or selling high in this particular case. So again, just breakout, we're looking for the opening range breakout. So if we took that into the US session, we've got 2 bear bars. Aggressive bulls might want to position themselves in the open drive direction. So we've got 3 legs, or 2 legs so far. The Asian breakout was bearish, the London breakout was bearish. Now we're headed into the US Open with 2 strong bear bars, and traders may want to position themselves. And we look back where we do see a gap from that breakout from the US session, traders may want to position themselves on the break of that second bear bar with a target minimum of when it hits that gap and fills it, at a minimum be going to break even. So again, they were able to possibly trail that down on either a smaller time frame or even on the 1 hour chart. Again, you have to decide what works for you. But again, we go into the next day, and again, I'm not trading all three of these sessions, but if I'm trading London, what I want to do is, as soon as we're getting to the close of that first hour, I'm going to look at my initial balance from Asia. Okay, and you can see in this particular case that the market traded outside of the range of Asia. Then on Frankfurt formed a small pin bar. The London hour triggered longs on that pin bar. And in this particular case, you just want to take a look and see, you can see a range. You can see a range that's there from high to low. And if you were thinking about going long, you want to obviously look at that and say to yourself, I'm buying low in this range, and I'm looking for that to retest the high of the range. So that's one way of trading that. Some traders may have tried to get a better fill down at the original break from the pin bar, but again, you're still looking at either using the bear bar to the left as your risk. So your entry could be a limit order of the high of the bear bar, because once that bear bar is closed above by the bull bar, that bear bar should hold if this is going to go long, and that market should actually be flipping. Those bears should be flipping into long positions if this market is going to turn around, which we saw that it did. And again, simple. We got a range here. We see a breakout. We see a pullback into the U.S. Open. So again, the question is which is which? Well, again, if you're not sure, you always go with the original line of drive. And in this particular case, bulls would have been triggered. But if you're waiting for some sort of simple setup, we talk about this in the 5-minute charts, where we like to see a congestion pattern after a breakout below support or above resistance, inside of that moving average, coiling and building up some pressure. So people trading the US session may have looked to position themselves somewhere above this moving average, inside of that range of that first hour of the US session, and looking for that break to occur. So again, just simple support and resistance, an opening range. So we go into the next day, and in a case like this where we see the range open up as an inside bar and a couple of inside bars and stay inside of the range of a previous high or large candle, I will let those ranges stay consistent. And in this particular case, as you can see, our original bullish breakout from the previous day, Frankfurt sort of breaks out. London is almost like a doji, but still making higher highs and higher lows and closing above that range. So again, when you see these longer tails like that, you have to be suspicious that this is just the beginning of a move. But again, you can use your shorter time frames if you want to confirm that with your 5-minute 20-period moving average. But again, we got a breakout, consolidation, so we've got maybe a bit of accumulation happening here, and then a breakout again. As the US opens, we're just going to draw our simple lines. Okay, so we got some support and resistance here into the US Open. And again, the market just kind of consolidated. We had maybe a little bit of a breakout near the high, which would have trapped bulls up near the top of that range. And so we know if these bulls were trapped into a trade, we know that most likely their stops are somewhere down below that bull bar, which we saw again the next day. Eventually, the Asian London Open retested those stops. So you got to look to see who's trapped. Keep your support and resistance levels really simple. Stay on side of momentum. If there's no momentum, try to be buying low and selling high. And as I said, traders, keep it really simple. Depending on what your availability is to the screen, you want to possibly use the 1 hour chart at the opens, especially London and US, and then towards the London close, and then possibly going down to your shorter time frame, just to ensure if you're positioning yourself, you're on the right side of momentum, and keeping it simple. As you can see from these charts, most likely any trade should only be really a 1 bar risk, 1 ATR, 1 R, whatever you want to call it. And so for the pound, you're looking anywhere probably on average at 25 to 30 pips. Check that out on your charts, whatever instrument you're trading. Keep it simple. Stick to the time frames, the major time frames where the volume's coming in. Use the opening ranges to give you a bit of bias, perhaps where the smart money is positioning themselves. Stay disciplined, stay focused, and keep it simple, traders. Hopefully this video helps today, and may the markets go with you. Have a great trading week.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.